Okay, right. Here is a quick strategy in 5 minutes. Quick Nasdaq strategy in 5 minutes. What you're gonna need only the moving averages. Okay, so we're gonna use the 55 exponential moving average. Go to trend. If you're using MT4, go to insert indicators, trend, and then you choose moving average. Okay, here where it says period, type 55, and you can change here where it says MA method, change it to exponential. By default, I believe it's on simple or smooth. Go to exponential. You can change the color. Let's change this to that color. Click OK. So this is our 55. We need to add another one. The second one will be the 21. Okay, we'll go back to the same one. Go to trend. And then here, we'll go for 21. On that 21, let's change the color, still exponential. Let me make this one red. Click OK. So you can see that we have two moving average. So the goal is to trade breakouts. That is what we're going to do. The goal of why we are putting this moving average together is to trade breakout. We are not necessarily gonna write them, but we're gonna look at breakouts. So in other words, if you see a breakout of these two moving averages or the area between these two curves, I believe those who did a little bit of calculus, you used to calculate something of that nature where you calculated the area between the curves, so whether you were using limits and all those kind of things. So you're using integration, I don't know. Okay. So what we have to do now after a breakout takes place is to wait for price to go back to this area that was broken out, and we look for a pin bar or a red candle, a bearish candle that is not too big. Of course, I talk about that in the course. Do go ahead and check that out. If you go to the Vindi website, you will see on the course there, you're gonna see, you see this one that says trend riding. There's just a lot of that around that point. Another strategy, my favorite strategy, trading the news. The zigzag can be helpful. That's another chapter that I'm busy adding. The hit and run strategy. You're looking at how to manage your trade. The BB strategy. We go all about Nasdaq and all that shit. It's there in the course. Okay, all you gotta do is to go over to that website and enroll. Okay, simple as that. I'm gonna leave the link in the description below for you to enroll. Okay, back to this. So what you want to do, obviously, you want to wait for price to come back there. As soon as it reaches that particular level, you look for opportunities to actually go short in the direction of the initial break. That is what we're trying to do. So it's the same as when you're looking at your price action patterns. Let's say maybe you get a pattern of this nature. Maybe this is a channel somewhere in space. Okay, let's say this is a channel somewhere in space, and you are looking to buy, let's say, the break of the channel. So what you will do, as a matter of fact, you will wait for price to actually come back and retest that particular structure right after break. I'm not sure if I've changed to, yes, I've changed to another instrument. Okay, so right after break, you will wait for price to break, come back and retest that particular dynamic structure. So if it broke out of this, for instance, if it broke out of this and then it went up, you wait for it to come back. Okay, as soon as you see that blue or bullish candle in the case of this, you click on a buy and you hide your stop loss below. Of course, same as this one, as soon as you throw a line there, it's broken and the moving average broken, price went back again. Okay, so this mini candle there was giving us that particular shandies. Of course, I do this strategy in detail as to what you should avoid and what you should look out for in the course as I've shown you on the website. So go ahead and check that out. And if you look at this once more, if you're looking at that, broken, price went out, came back to retest, and then it started going down. Okay, so if it breaks, it needs to come back and retest. We're doing this for breakouts. Does it make sense? I hope it does. Okay, let me know in the comment section below. What you do, you wait for these two moving averages to be broken. As soon as that break takes place, you wait for price to come back. Here's a break, took place, price went, and then it came back, and hit the first moving average and started riding above it. Okay, it started riding above it. So whenever it comes down to hit it, you look for an opportunity to go long. In the case of this one, because we're in an uptrend, just like that. As soon as you see the initial break, you know that there's some sort of transition, so you can keep on trend riding in that direction. Okay, even on this one, if you look at this one, it broke. This is an aggressive break. There we had the moving average. If you draw a trend line, it was broken. Price went back up, hit that those moving average. First red candle started selling down a little bit. It didn't last for a very long time. So that's the main goal. You look for a breakout and a pullback. So you can see that here we had a breakout earlier. Of course, it broke out of that, went down, and this pullback, it's very, very, very small because it's just like a one candlestick pullback. Can you see this candlestick that I'm pointing at? That is just a one mini candlestick pullback. Okay, it broke out, went down, and then gave us this, and then the red candle was a trigger to show that we're going in that direction. Similar to this, if we're to use this to project the future, if this thing breaks here, okay, and it goes up, it needs to come back and test so that we can buy, and then we're gonna buy to the upside. So it's the same thing. You're just looking at these two moving average that they should be broken. For now, for this part of the strategy, we are looking at trading breakout. Okay, I can put Dow Jones on the charts. Same thing. You can see it broke. Okay, so you can see this 21 was broken. Price went back up to retest the first red candle. That was a trigger. As long as the candle is not too big, that is very important. As long as the candle is not too big, you're good to go, and then continue. So same thing as the Nasdaq, as I've shown you. If it breaks these two, okay, in the case of this one, if it breaks this, it needs to come back and pull on the first green, pull back there. We need a first green candle that will be a trigger back to the upside. Okay, so that's how we can use the moving average, the 55 EMA and the 21 EMA to actually look at breakouts. Let me see if I can add one more asset, the UK oil. Yes, this is a good example. I'm glad that we're looking at this. You can see that it broke out. Okay, it is now coming back. Okay, it's coming back to this area that was broken out of. So this is the structure. Breakout took place, price came back. So if you want to engage in this, you wait for the next nice green candle. It could be a pin bar of some sort, and then you buy and then put your stop loss below that. Okay, this is going to be more feasible for those who will be actually trading on lower time frames, like the 5 minutes. Those who love scalping, you can actually implement. But disclaimer, back test this before you put it into your charts, because some of you love asking for PDFs, you love asking for strategies, but you never get to back test. I mean, if you fail to back test a strategy for 2 weeks, that is why you don't even survive 2 days on the markets. Okay, so take time, back test, adjust where you need to adjust. Don't dump your strategy. Try to fuse this with what you already know and see if you cannot build one robust strategy. Okay, of course, this is just a summary of what you can do with these two indicators. Like I've said, there's just a whole bunch of information that you can use in conjunction. In the course, if you click on curriculum, you're gonna see that there's a lot, the risk and expectations and all that, the V's and the zones, how to draw that, all about the trend lines, the staircase rule, the violation and all that, how to trade them nicely, that the Fibonacci and all the advanced validating pin bars, where to put stop loss and all that. It's there in the course for you to watch anytime. So this alone can make you a good profitable trader from here. But the most important part is for you to understand risk management. Once you understand risk management, then the rest is just gonna be super easy. Understand risk management and implement risk management. That is very, very important. Otherwise, to recap, we are doing breakouts of the moving average. So whenever these two moving averages are broken out of, okay, so the first thing that you have to look for, they need to be pointing in one direction, down or up. Okay, so as soon as this upward move is broken, we look for a retest. As soon as this downward move is broken, we look for a retest. So for example, let me see if I can find, yes, if you look at this one right there, it's looking up. So as soon as this upward move is broken, let's say the last moving average there, which is the 55, you look for a pullback. And then the first red candle, that is your trigger to the downside. Okay, simple strategy. This is going to be very, very handy when you're looking at very, 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 very volatile assets like your synthetic indices. This is just going to be very, very helpful. Okay, so you can see even here, if we go to a much lower time frame, let me just show you. So you can see that this particular guy, it's coming down. So if we're to look for a buy, because now we're going down, okay, so if we look for a buy, it means we need a breakout out of this particular shandy. So as soon as it breaks out and reaches, that's where we'll find, look for a buy, the first green candle, and we're good to go. But the candle needs to close. Okay, I think I said I was going to spend 5 minutes doing this. I've spent 10 minutes. Unfortunately, I had to dissect that nicely. If you have anything to say, type down in the comment section below. All right, so you can use this for to trade Nasdaq, to trade Dow Jones, to trade oil, to trade your VIX 75, VIX 100. It's just the same. But the main goal, for main purpose of this video, is to look at breakouts and retest of these two dynamic structures. You can add trend lines in the process to be able to achieve more robust results. Otherwise, hit the like if you've watched this video up to now. Share the video with your friends. Let's grow the channel. At least let's get to 10,000K. We're not too far. 10,000. Did I say 10,000K? 10K. Yeah, right now it's time to shut down. Yes, yes.